Good morning, good afternoon, good evening. How are you guys doing today? Rufaro here with RAS Professional Corporation. Today, I'm excited. I'm here to talk about 3 savings accounts that people use. A lot of people don't really know the differences between the accounts. So I'm here to break it down a little bit more so you make better decisions in terms of how you want to save and which account is best for your goals. So the 3 accounts I will chat about today are the registered retirement savings plan, the tax-free savings account, and the first home savings account. Well, the first one, registered retirement savings account or plan, is basically for retirement savings. Why is because the idea is you save your money in this account now, you save it tax-free, and then withdraw it when you're in retirement because you're going to be in a lower tax bracket, right? Because if you're making more income right now, you're probably in a higher tax bracket. Whereas when you retire, you're probably not making as much money, so you'll be in a lower tax bracket. So really, that's the point of that account. So anyways, let's go into a little bit of detail and I'll compare each one just so we don't lose track here. I have a list of key factors to consider. Okay, so the first one is the contributions. So with RRSP, which is a registered retirement savings plan, the contributions that go into the account are tax deductible. When you file your taxes, you actually deduct the contributions you made to the RRSP from your taxes. Awesome. That means you're saving taxes, right? Immediately, you're saving taxes now, but you will pay when you withdraw later. The tax-free savings account, you can't deduct the money. However, when you put money in the account, your money is growing. The growth on your money is tax-free. So when you take money out of a tax-free savings account, you're not getting taxed. So that's the benefit of that account. The first home savings account is like the RRSP in that you can deduct any contributions you make to that account and you're saving on taxes. But it's not even tax deferred because if you make a contribution to your first home savings account, you deduct that from your income when you're doing taxes, so you're not paying taxes on that. And then if you withdraw that money to buy a home for the purposes of purchasing a home, you're not getting taxed on that money. So it's really great for first home purchases. So I highly recommend looking into that account if you have not bought a home and you'd like to buy a home. So contribution amounts. The RRSP, usually the calculation for how much you can contribute is 18% of your earned income from the previous year. So for 2024, it would be 18% of your 2023 earned income, essentially, to a maximum of $31,560. That's the max that was set by CRA for 2024, which means if 18% of your earned income is more than that 31,560, it means you are automatically limited to 31,560 because that's just the limit for everyone. Okay, for the actually tax-free savings account, you can contribute $7,000 a year, and for the first home savings account, you can contribute $8,000 a year. However, RRSP, there's no limit to how much you can contribute. You're limited how much you contribute each year, but in the long term, there's no limit, right? Because it is retirement savings. For the tax-free savings account, the limit is $95,000. So that's the most you can put into that account. And then for the first home savings account, you can save up to $40,000 to contribute to your first home. Okay. Tax treatment, I already spoke about. The RRSP is tax deferred. You can deduct it now from your income, but you pay taxes when you withdraw from that account in retirement, hopefully, because you're going to be in a lower tax bracket. That's the idea, guys. The first home savings account, sorry guys, my video stopped recording. I don't know why, but anyways, so the tax-free savings account is the money going in there is taxed. However, the growth is tax-free, so you can withdraw. You won't get taxed on that. That's the benefit, as I said earlier. And then the first home savings account, again, it is tax-free in that whatever you contribute to that account, you deduct from your taxes. However, when you purchase a home, you're basically using that money to purchase a home. If you use it for anything else, then yes, you will be taxed. It will be taxed as income. Best for, basically, what's the account best for? RRSP, it's in the name, guys. It's a registered retirement savings plan. The idea is to take that money out when you are in retirement. Do not put money in an RRSP and be withdrawing it like every 3 months. That's not the purpose of the account. You can do that if you want. You will get taxed on that money. But if you want to do that, I would say go with a tax-free savings account, because the money you're taking out is not taxed. And so, there's no, not penalty, but you're not getting taxed on any withdrawals. If you're going to withdraw regularly, then use that account instead of the RRSP. Leave your RRSP for retirement, right? That's the idea. First home savings account for a first home. They created the account for a first home. Some of you may be familiar with the home buyer's plan, where you would be able to withdraw money from your RRSP to purchase a home, and then you paid back over 15 years. So I guess it was very popular. So the government of Canada came up with this first home savings account for those that want to purchase a home. That way it's a little less complicated than using an RRSP, because, the payments, and it gets a little complicated to some extent. So first home savings account is awesome. What other key factors to mention? I guess when thinking about retirement, you get old age security and guaranteed income supplement payments. Because RRSPs are considered income when you withdraw it, right? It's getting taxed as income. They might affect your guaranteed income supplement and old age security. I can't speak anymore. Your old age security, because there are caps to your income when it comes to those payments that come from the government. So something to consider, but still, RSP is good for retirement, so I would still go with that account. And then, the tax-free savings account and the first home savings account don't really affect your, payments in retirement, because they're tax-free, the growth is free, and so there's no effect. It's not counting as income. So anyways, hopefully that helps somebody, right? Hopefully you use the right account for the right purposes. I see a lot of people withdrawing from the RSP. Of course, times are tough. If you need the money, of course, take it out. But that account really is meant for withdrawing in retirement. So I hope that information helps you. And if you have any questions, please let me know. Have a wonderful day. Thank you for listening, and talk later.